Welcome to this deep dive into International Gemmological Institute, India, or IGI. We've got a stack of documents here: investor presentations, board meeting outcomes, auditor reports, press releases, even the earnings call transcript for Q1 CY25.
Yeah, quite a bit to get through.
Our mission today is really to unpack all of this, pull out the key insights, and give everyone a clear picture of what's going on with IGI.
Absolutely. There's a lot here. Some impressive growth numbers, strategic shifts in, a pretty dynamic market.
So we'll look at the financials,
Right. The segment performance, natural versus lab-grown diamonds, that whole picture.
their global position, industry outlook,
Hmm.
maybe touch on those trade policy changes too.
Definitely need to cover that. By the end, everyone should have a really solid grasp of IGI's performance and sort of what's driving things.
Okay, let's dive right in then. Q1 CY25, consolidated results. What's the headline?
Well, the headline is strong momentum. It seems to be continuing from previous periods.
Okay, how does that translate into numbers, report volumes?
Yeah, total report volumes hit 3.12 million. That's up from 2.77 million in Q4 2024.
Okay, so that's, what, about 13% quarter on quarter?
Exactly. And year on year, it's even stronger, up 27%. So significantly more activity.
More reports should mean more revenue from
Yeah,
certifications.
Precisely. Certification revenues came in at INR 2,967 million. And how does that compare?
That's up 20% from Q4 and up 11% compared to Q1 last year. Healthy growth there.
Now, this average realized price, the ARP, it was INR 950, up 7% quarter on quarter, but down 12% year on year. What's happening there?
Right, so that year-on-year dip, that's mainly fallout from the lab-grown diamond pricing changes they made back in April 2024.
Ah, okay, I remember that.
But the key thing is those prices seem to have stabilized now. And actually, the quarter-on-quarter ARP increase was helped by a better mix, more loose stones, both natural and lab-grown.
So the LGD price adjustment caused the yearly drop, but volumes and mix are pushing it back up in the short term. Makes sense.
Exactly.
How did all this flow down to the bottom line?
Profitability.
Looking pretty good. Profit after tax, or PAC, was INR 1,407 million,
Which is,
up 24% compared to the last quarter and up 12% year on year.
and the pay T margin.
Also improved, it hit 46.2%. That's up from 42.9% last quarter and 45.4% last year. So they're keeping more of each rupee earned.
Very strong margin. What about EBITDA, operational profit?
Also very strong. INR 1,957 million. That's a 29% jump quarter on quarter and 13% year on year.
And the EBITDA margins.
That's 64.2%. That's up significantly from 57.4% last quarter and also better than the 62.4% last year. Just as good operational efficiency gains.
Okay, so overall, a really solid Q1 consolidated picture. Let's zoom in a bit. How did the different segments perform?
Right, looking at the consolidated certification revenue breakdown, natural diamonds, ND, saw a big jump, 37% quarter on quarter.
Wow. Year on year.
More modest, up just 1% year on year.
Okay. Lab-grown diamonds, LGD.
Also strong growth, 35% quarter on quarter and 9% year on year.
What about jewelry? That seems to be a growing area.
It is. Natural diamond jewelry was actually down slightly, 11% quarter on quarter. Oh, interesting.
But importantly, it's still up 21% compared to Q1 last year.
Okay, and the LGD jewelry, that's the one everyone's watching.
Yeah, and it didn't disappoint. Up 16% quarter on quarter and a massive 87% year on year.
87%. Okay, that really stands out.
It absolutely does. That's clearly a huge growth engine for them right now. As the presentation notes, the higher mix of LGD loose stones helped the overall ARP quarter on quarter.
Right.
But the revenue growth story, especially year on year, is heavily driven by that LGD jewelry surge. It suggests a real market shift.
What about the gemstone and others category?
That was up 14% quarter on quarter, but down quite a bit, 39% year on year.
Any reason given?
The documents don't really break that down much. Could be market fluctuations, maybe a strategic focus shift. Something to note, though.
Okay. So lab-grown jewelry is the star, natural diamonds, strong QOQ, ND jewelry, solid. Get out of the way. Let's switch focus to India specifically. Standalone performance.
Right. India also showed really strong momentum. Report volumes there were 2.78 million. How does that compare?
Up 11% from Q4 and up 27% year on year. Very similar growth rates to the consolidated picture, actually, highlights India's weight.
And the certification revenue just within India.
Reached INR 2,330 million. That's up a very impressive 30% quarter on quarter.
30%. Wow.
Yeah, and 13% year on year. So India's QOQ revenue growth actually outpaced the consolidated rate.
The ARP in India? Same pattern?
Yeah.
Up QOQ, down YOA.
Exactly the same pattern. INR 839. Up 17% QOQ, but down 11% YOY. Again, attributed to those LGD pricing changes from last year stabilizing.
Okay, and profitability for the India business alone?
PAE in India was INR 1,391 million. That's up 25% QOQ and 11% YOY. Strong numbers.
PAT margin?
59.4%, which is very healthy. It's actually up from Q4's 58.7%.
But slightly down year-on-year. It was 60.1% in Q1 last year.
Right. And the documents mention this is because of increased investment in people, hiring more staff.
Investing in growth. Makes sense if volumes are up that much. What about India EBITDA?
INR 1,818 million, up 28% QOQ, 10% YOA.
And the margin?
77.6%. Again, up from Q4, but down slightly from 79.4% last year, likely for the same reason, investing in their team.
So India is clearly a powerhouse for them, and they're actively fueling that growth with investment. Okay. Let's pull back again. The big picture, company, snapshot, market position.
Yeah, the investor deck really plays up their strength here. They state they're the largest certification body in India, roughly 50% market share.
50%, that's dominant.
It is. Globally, they position themselves as second largest, around 33% share.
Okay.
And, crucially, the global leader in LGD certification. They claim about 65% market share there.
65% of the global LGD market. That's huge.
It really underscores their position in that fast-growing segment.
The overview also touched on their full year 2024 numbers, didn't it?
Yes. For CY24, revenue INR 10,532 million, EBITDA margin 57%, PAT margin 43%, and revenue grew 17% from 2023. So consistent growth leading into this year.
And they have quite a history.
They do. 50 years globally, 25 years in India. They also highlight being pioneers at jewelry reports, hearts and arrows reports, LGD certification standards, their D-check screening system.
Right. They seem to have driven a lot of innovation.
Seems that way. And their service offering is broad. Natural, LGD, jewelry, colored stones, education, appraisals, screening, equipment sales, the whole stack.
Who are they serving?
Over 7,500 customers globally, and notably 9 out of the top 10 jewelry chains in India.
Wow. And their physical presence, labs, schools.
Quite extensive. 31 labs, 18 schools across 10 countries, with a major focus on India, of course, given it supplies, 95% of the world's polished diamonds?
Yeah, that Indian presence is clearly strategic. Okay, let's talk about the broader industry picture they painted.
They see a dynamic, growing market. Diamond jewelry is flagged as the fastest growing piece of the overall gems and jewelry market.
Any projections?
Yeah, they expect it to reach about $140 billion by CY28, up from around $100 billion in CY23. That's pretty significant growth forecasted.
What's driving that, according to them?
A few key things. LGD adoption is a big one, obviously. Also, expansion into new jewelry types, changing trends, more focus on affordability.
Which LGD helps with?
Exactly. And certification itself is seen as a fast-growing market, but one with high barriers to entry, which benefits established players like IGI.
And India's role in all this?
Crucial. Number 1 polisher, number 2 LGD producer, and handling a huge chunk of global certification volumes, especially for LGDs like 75–80%.
And that LGD market itself? Still seen as a big opportunity.
Absolutely. They highlight it specifically, driven by consumer shifts towards things like ethical sourcing, value for money. LGD ticks those boxes for many people.
Okay, let's look at their strategy. How do they plan to capitalize on all this? What are their strategic pillars?
Well, their big vision is clear. Become the global leader in accreditation services, period.
Ambitious.
And their value proposition rests on trust, quality, integrity built over those 50 years.
And the specific steps, imperatives.
They list several. Maintain LGD leadership, obviously, expand the global lab network, invest in technology, grow in natural diamonds, jewelry, colored stones too, leverage their education arm, build the brand, and drive operational efficiencies.
Sounds comprehensive, covering all bases.
It seems like a multi-pronged approach. They also mentioned a couple of recent things.
Like what?
Well, they certified the jewelry for the Ram Lala idol in the Ayodhya Ram Mandir.
Ah, yes. That's quite significant in India. A big trust signal.
Exactly. And they launched a new brand campaign in January this year. IGI, Trust Certified.
Good timing. Okay, lastly, let's touch on the earnings call transcript. Key discussion points.
Management really hammered home the strong growth momentum across the board.
Yeah.
They specifically called out revenue growth in core natural and lab-grown segments being over 30% quarter-on-quarter.
Impressive. But jewelry growth was single-digit QOQ, you said?
Yeah, but they explain that it was mainly due to comparing against Q4, which had the big festive season push, a high base effect. They still see jewelry as a key future growth driver. And they confirmed LGD certification prices have stabilized after that correction last year.
So the outlook from management sounds pretty positive.
Very much so. Confident about continued demand for both ND and LGD, and especially growing demand for jewelry certification.
Are they investing to meet that demand?
Yes, ramping up people and labs. They mentioned recruiting over 130 gemologists in India just in Q1. It's a big hiring push, maybe 14–16% increase in staff there.
Wow. Any other initiatives?
They're starting a digital transformation project, aiming to improve service quality and, crucially, reduce turnaround times.
That's always key. Any specific targets for the year?
They expect to maintain the growth momentum. For CY25, they're guiding for 15–20% consolidated revenue growth. And they expect the India business to perform similarly. They also forecast an improved PT margin for the full year 2025 compared to 2024's 57%. Oh, wait, sorry. The PT margin outlook was guided between 57% and 64%. No, that sounds more like EBITDA margin range. Let me recheck that.
Really?
Yes, the EBITDA margin outlook for CY25 is between 57% and 64%. My apologies. The PT margin in CY24 was 43%. They expect improvement on that.
Okay, EBITDA margin between 57 and 64% for CY25, aiming for improvement on the 43% PT margin from CY24.
Got it. What about the impact of more jewelry certification? Does that hurt margins?
They addressed that. Even though the average realization per piece might be lower for jewelry than loose stones, they said margins have remained strong, probably due to volume and maybe efficiencies in processing jewelry.
Interesting.
They also noted the average carat size of LGDs being certified is going up more 2-carat plus stones now. That helps realization. And they use cluster certification for jewelry with lots of small stones.
Did they talk about the different report types, full reports, dossiers? Briefly. Said it caters to retailer preference, but the underlying analysis and the pricing, which is linked to weight, are consistent.
Okay. And the elephant in the room, U.S. tariffs on LGDs. Any impact?
They acknowledged tariffs are a disruptor globally, but they stressed that about 60% of their business is domestic India and China, mainly.
So less direct exposure.
Sort of. And they feel tariffs on services like certification are less impactful than on the products themselves. They expect the 10% U.S. tariff impact will probably get spread out, manufacturers, retailers, consumers, all absorbing some.
So no major disruption seen yet.
No, they said numbers are still increasing. They also highlighted significant growth pickup in LGD jewelry certification in India and mentioned improving margins in their international business outside India, like the Netherlands group, which includes China and Dubai.
Okay, and how do they see the rest of the year shaping up business mix-wise?
They expect Q2 to look pretty similar to Q1 in terms of mix, but Q4, they anticipate a bigger swing towards jewelry because of the festive season demand, like we discussed.
Yeah.
And they also just noted that LGD acceptance is still generally higher in places like the U.S. compared to elsewhere, which affects regional volumes.
So wrapping this up then, it looks like IGI had a really robust start to CY25. They're building on that leadership position, especially in LGDs.
Yeah, and that growing adoption of lab-grown jewelry, particularly in India, looks like a major tailwind for them.
Plus, their investments in people, labs, technology, it signals they're serious about grabbing these opportunities.
Definitely. The management tone seems confident, even with global uncertainties hanging around. The numbers, the strategy, it paints a picture of a company navigating a tricky market pretty effectively.
So hopefully this deep dive gives everyone a solid foundation on IGI's recent performance. What really jumps out to you from all this?
For me, it's probably that massive 87% EOI growth in LGD jewelry certification. That's just a huge number and really shows where a big part of the market momentum is and how well they're positioned there.
Yeah, that's hard to ignore. For listeners, maybe think about those potential tariff impacts or how sustainable that LGD jewelry growth is. Are there other factors you'd want to dig into? This is just one quarter, of course.
Exactly. Things change fast. But yeah, definitely fascinating company and industry to watch right now.